ಕಾಣಿಸಲ್ಲಪ್ಪ ಅದರಲ್ಲಿ ಬೆಳಕಿನ Hi guys, very good morning. We'll be starting this session. But prior this, I just want to tell you from past 3 days there wasn't any market, so there might be a very gap up or gap down in the market. So yeah, we'll discuss about all of that, and we'll discuss about the trade you guys took on Thursday. If you guys taken any position, or if you are guys holding any positions, just let me know. We'll continue the session with that. Also, we'll discuss about the trades, positions, and also the news which are like impacting the market right now, and the reason why markets is in this way after 3 days. Let's just continue with the session. So yeah, guys, we'll continue about the news and welcome back to our channel. As you guys know, I'm Sushma. If you guys are watching this today, right now, you are the right place because on June 29th, today, 2026, is one of the most loaded market days we have seen in last months. So yeah, I'm talking about historic index reshuffle, a brand new IPO still finding its footing. So $250 billion stock losing a quarter of trillion in a market cap in a single week. So AI drama that reads like a Silicon Valley thriller and a market that is caught right in the middle of a massive rotation. We are breaking all of that today and pre-market gaps, the opens, the major movers, and what this week's setup looks like heading into a critical economical data in this way. So yeah, let me know your biggest trade this week, and let's go into it. And let me know in the comments what about your trade. For now, I'll be sharing the chart. Yeah, guys, hope you guys can see the screen now. I put Nifty charts so that if you have any updates in that, so I'll be telling in the middle of the news only. We'll be updating as soon as possible when we get the update. So yeah, we'll just again move back to the news. So before we touch pre-market, let's talk about where we are coming from because this week's setup doesn't make any sense unless you understand the chaos of the last five trading sessions. So the last Monday, uh, June 23rd, Alphabet fell 6% in the worst single session, dropping nearly a year, wiping out close to $250 billion in a market cap. So this happened right after the announcement that it was being added to the DOE. So two major AI talent departure dropped investor confidence. The first is Noam Shazir, the co-author of Landmark 2027, and attention is all you need. AI paper and co-lead of Gemini, which is left for OpenAI. Google had paid approximately $2.7 billion to bring him back from character. So AI less than 2 years ago, then John Jumper, who literally won the 2024 Nobel Prize in chemistry for AlphaFold, left Google DeepMind for Anthropic. These are not just departures; these are the architects of Google AI future, and who are walking out of the door. So on June 24, the global tech route dependent, like South Korea's Kospi plunged to 9.99%. It's the steepest drop in more than 3 months. As overseas investor dumped chip stocks on overheating concerns, Samsung and South Korea Hynix East dropped over 12%, triggering an automatic 20 minutes trading halt. In the US, Nasdaq fell to 2.21%. The S&P 500 dropped to 1.44%. And also, Nvidia fell 3.2% to around $202. Micron dropped to 11.4%. And also, Oracle dropped, which is 2.6% in pre-market. After disclosing it caught roughly 21,000 jobs, about 13% of its total stuff. Over the past years, as AI reshapes its workforce, the company reported a $1.8 billion in restructuring costs. The Oracle, and also after that, Micron reported strong earnings and guidance, sparking a major semiconductor bounce on Thursday. So Nasdaq recovered. Chip makers rallied. Also after that, but it didn't hold. Dow closed at 51,876 and down 45 points over 0.09%. And the SIP 500 inched down 0.05%. Nasdaq 100 lost 1.1%. And chip makers gave back Thursday again. Micron fell by 6.7%. Nvidia dropped 1.6%. And also Western Digital fell up to 10%. So one big positive on Friday happened is Alphabet officially replaced Verizon in the Dow Jones Industrial Average effective before today's open. So and Eli Lilly sold 7% on Friday after the EU approached its leukemia therapy. So this is a backdrop, a week of wild tech swings, massive index change, a new mega gap and a cautious macro environment. So now let's just talk about today, what's happening in the market, the post market, also the pre market of today. Yeah, the first one is AI sell-off hangover, which is after Friday's close. AI and semiconductor names continue to face pressure in extended rate trading. The broader narrative going into the weekend was investors are rotating out of mega cap tech and AI names and also rotating into more defensive and value oriented sectors. 6 of 11 SIP, S&P 500 sectors closed green on Friday, even as the major indices fell. That tells you everything about what's happening under the surface. Money is moving, just not where it's been for the last 2 years. As I mentioned, Alphabet joins the door. This is the headline of the day. Tonight, before the opening bell, Alphabet officially enters the Dow Jones Industrial Average and replacing Verizon Communications. So this is the first change in to the 30 stock blue chips index since November 2024. And why you think this matters is because the Dow is priced weight, right? And Alphabet's share price sits near $345. So versus Verizon's roughly $46. That means Alphabet now carries approximately 7 times more daily influence in the Dow Jones than Verizon did. So 1% move in Alphabet moves the Dow about 7% more than the same move in Verizon. So this is the fundamentally different Dow. And also SIP Dow Jones indicates had to recalculate the Dow divisor overnight. That's the denominator used to convert the sum of 30 share prices into one index to prevent the index from artificially jumping just because a higher price stock replaced the lower one. Yeah, for DIA ETF holders, that's the SPDR Dow Jones Industrial Average ETF, holding about $43 billion in assets. Fund managers must sell Verizon and buy Alphabet this morning, so regardless of fundamentals. That mechanical buying pressure is actually real. Alphabet is now alongside Apple, Microsoft, Amazon, and also Nvidia in the door. Five of the biggest tech gains on the planet, all in one index now. But at this tension, Alphabet heads into today's session, nursing serious wounds, down more than 11% over the past 1 month. And talent crisis, AI capex concerns, antitrust exposure, and competition pressure. The Dow inclusion is symbolic. The stock's recovery depends on whether Google's can prove AI is creative to search margins, not destructive. And also, Alphabet's fundamentals are strong. Q1 revenue of $109.9 billion, up to 22%. Google Cloud up to 63% to $20 billion. So search revenue up 19% to $60.4 billion. But full year capex guidance is staggering 180 to $190 billion. That's the actual concern now. So yeah, we'll talk about the volatile newcomer, which is SpaceX. So SpaceX IPOs on June 12th at $135 per share, the largest IPO in stock market history, raising $75 billion, and it closed at $161 on the day one, up 19%. Hit on all-time higher $225.64 on June 16th. That the tech sell-off hit and it's been coming down very hard. So as of this morning, SPCX pre-market price is $150.65, down about 1.54% in pre-market, are roughly $2.35 after a hard Friday, and it had a $154.78. The stock is now is at 52-week range of 135 to $225.64. Market cap sits around $2 trillion. It's still massive, and the stock is set to be added to the Nasdaq on July 7th, the 1 week from today, the next week, which could be a huge catalyst forcing massive index funds to buy shares, like which is automatically. There is a technical note floating around right now. SPCX has formed what analysts are calling head and shoulder pattern with a possible bounce target near $190 resistance on the upside. Watch that level. Argus initiated coverage with hold, but average analyst price target is $187.80, about 22%, 22.5% upside from the current level. And yeah, this is another historic event happening today. That is, Honeywell International is completing the spin off Honeywell Aerospace, trading under ticker HONA as the final phase of breaking up its conglomerate structure. So, post spin off, the parent company continues in the Dow as a Honeywell Technologies under ticker own. So, Honeywell Aerospace will not be in the Dow for existing Horn shareholders. Watch your brokerage account this morning. You should be receiving ONA shares as part of the spin-off distribution. And this is a catalyst for both stocks. Spin-offs historically outperform the market over 12 months following the separation. Keep both HON and ONA on your watch list for today. We'll talk about the main news about Iran, state of Hormuz and oil prices. So, geopolitics is never far from this market right now. The last week, Trump posted that Iran had fully and completely agreed to highest level nuclear inspections and agreed to keep the state of Hormuz open. But he also accused Iran of violating the ceasefire by firing at the cargo ships, highlighting the frugality of the truce. So oil fell more than 3.5% on Friday as tanker traffic through the state continues following largely unimpeded. So Brent crude was around $78 per barrel earlier this week. So lower price oil prices easy like inflation concerns and give the Fed a breathing room, which is positive for the broader market. So yeah, let me just give you the rough pre-market picture based on the setup heading into today's open. So SIP, S&P 500 futures slightly mixed. Tech names are pressuring the index now. So Nasdaq futures under mild pressure from the AI and the chip rotation. And the Dow futures. Watch closely the alphabet addition creates unique price dynamics today. And VIX coming off last week's spiker near 19.49. Any comparison here is bullish. And gold around $4,063 per ounce, holding elevated. And also oil continues to trend lower on Hormuz news around $74 per barrel. So, guys, I just want to mention about JP Morgan's S&P also. Just this week, JP Morgan raised its 2026 S&P year-end targets to 7,800 up from 7,200, suggesting another 5% upside from current levels. The reasoning, blue sky scenario fueled by easing geopolitical risk, strong earnings and consumer reliance. We are currently somewhere around 7,400. Uh, yeah, that level. That 400 points upside is meaningful, and if the Iran situation holds. So yeah, let me tell you this also. What what to watch in first 15 minutes after you enter, like not today but every day. But yeah, currently if you are already entered the market, if you are thinking of taking any trades or positions, just look it up the market before entering, because the open on a day like this is going to be chaotic. Watch alphabet, and you have two forces colliding. Yeah, as I mentioned, you watch alphabet, and you have two forcing colliding. And yeah, mechanical buying from DIA fund managers who must buy Google this morning to track the new Dow composition, and fundamental selling pressure from the AI talent cases. This is $190 billion capex concern, and the stock down over 11% in the month. This creates a fascinating opening dynamic, and if the mechanical bid is stronger, Google could gap up and hold. If the fundamental sellers are aggressive, the stock gaps and fades. This is one of the most interesting event driven and in the opens of the market this year. So yeah, we'll continue. Yeah, we already know June started on a really weak note. Nifty briefly dropped below 23,400 mark, and three things draw that weakness. First is the Iran war and the crude oil shock. Brent crude was trading between 100 and 100, $113 on a barrel, but India is one of the world's largest crude oil importers, and when oil speaks like this, it hits India directly, and the important bill goes up. The current account defects evidence, inflation picks up, and the rupee comes under pressure. And the second thing is FII selling. Foreign institutional investors were dumping Indian stocks aggressively on one side, one single day. So FII sold over 4,400 crore rupees worth of assets. Domestic investors stepped in and bought around 4,360 crore. But the next net effect was still negative for the market. And the third one is the RBI policy meeting on June 5th. The Reserve Bank kept the repo rate unchanged at 5.25%, but they downgraded the GDP forecast for FY27 from 6.9 to 6.6%. And they raised the inflation forecast to 5.1%, citing crude oil and food prices. This was mixed signal, stability on the rise, but softer growth outlook. Also, Sensex fell 719 points in a single session. Iran Israel tension were at their peak. Crude oil spiked, and fears of US rate hike came back into play. Nifty closed at 23,123. That was the low point of the month. And we'll talk about the recovery. The RBI announced new liquidity support measures, FCNR and ECB swap facilities. Global cues improved. News came in of progress on the India-US trade. Banking and aviation stocks saw a strong buy. Nifty bounced plus 1%, 119 points. Sensex recovered 394 points. The market excelled. Yeah, I was talking about Nifty. So I was talking about Nifty. On June 18th, the Nifty closed at 24,168, forming a positive candlestick and finishing above 100-day EMA, a technical bullish signal. However, on June 19th, the Sensex declined by 607 points as heavily selling in IT stocks, weighing on the broader market. Major name including SDFC Bank, Infosys, Reliance Industries, TCS, and Mahindra all came under pressure. And yeah, the week of June 22 to 25, which is actually a strong comeback. The market staged an impressive recovery during the final trading week. On Monday, June 22, the Nifty opened with a 362-point gap up, starting the week at approximately 23,984. It touched the weekly high of around 24,189 because before closing the week near 24,013, delivering a gain of nearly 390 points or about 1.65%. On Thursday, June 25, the last trading session before the Muharram holiday, Sensex closed at 77,072, up 81 points. Top gainers are Mahindra and Maruti Suzuki, Nestle India with 1.97% of gain, and also in Maruti Suzuki, it's up by 3.81%. And top losers are Power Grid, which is minus 2.20%, and Tech Mahindra, which is minus 1.49%, and Bharti Airtel also minus 1.46%. And India VIX 12.76, indicating relatively low market volatility. Brent crude oil around $72 per barrel, significant decline from earlier high above $100. And also Indian rupees strengthened to around 94.2 per US dollar. So yeah, finally remember that the market will close on Friday, June 26th due to the Moram holiday. That makes Monday, June 29th, today the first trading session after the long weekend, making the today's market especially actually important. So yeah, now let's take a look at today's pre-market setup and what the early indicators are telling us. And we'll talk about the gift nifty, which is actually positive opening before the Indian markets opened. Gift nifty was trading about 0.14% higher, hovering around the 24,090 level. This suggests a slightly positive start for the Indian stock market. And crude oil prices continues to fall. This is one of the biggest positive for India. Brent crude has dropped sharply from $100 to nearly $72 per barrel, while WTI crude is trading above below $70. The decline has been driven by improving geopolitical conditions, easing tensions in the Middle East, and the resumption of tanker movement through the state of Hormuz. And you may be thinking how it affects the low crude prices benefits in India's like in a several way, reduce the input cost, improvement in the current account deficit, lower inflationary pressure, strong Indian rupee, possibility of lower fuel prices, greater flexibility for RBI in the monetary policy. Overall, falling oil prices remain a strong positive for the Indian whole economy. And also, RBI maintains a supportive stance. RBI Governor Sanjay Malhotra recently stated that it is too easy to consider another interest rate hike, and this reassured investors that borrowing costs are unlikely to increase in the near future. The stable interest rate environment generally supports sectors like banking, NBFC, housing finance, also real estates. Actually, lowering finances costs help business expand while encouraging customer spending. FI and DI both are buying. FI net buyers of approximately 383.8 crore and DI net buyers of approximately 5,747.8 crore. This is actually today's data, and both foreign and domestic institutions are buying simultaneously. It usually provides strong support to the overall market. And what's the trade relationship in the India-US? Recent progress in the trade negotiation between India and the US states has improved, as we know, in the market sentiment. Lower traffics and larger, stronger trade cooperation could benefit several export-oriented industries, especially India's IT sector. Companies TCS, Infosys, Wipro, HCL could benefit from stronger business opportunities in the US market. Strong corporate and economic performance. Yes, the India continues to show healthy economic fundamentals and around 12% revenue growth for listed companies, approximately 15% profit growth, and FY26 GDP growth of nearly 7.7%. GSC collections about 1.94 lakh crore in the May. These indicators suggest that the economy remains resilient despite global uncertainties. Yeah, we'll talk about the India BIX is currently around 12.76, indicating relatively low market volatility. The lower BIX generally reflects a stronger investor confidence and more stable uh, trading environment. Yeah, while the outlook is like positive, investors should remain cautious about a new few important risks. One is continued weakness in the IT sector, which is Nifty ET index has declined significantly over the past 6 months. Companies like TCS, Wipro, Infosys has experienced a sustained pressure following weaker globally technology spending. But however, strong performance from companies like Microsoft, IBM, Salesforce suggests that enterprise technology demand remains healthy. If global IT spending improves, Indian technology companies could also benefit. Yeah, we'll talk about the Nifty again. Nifty faces major resistance. The zone between 24,200 and 24,400 remains an important technical resistance area. Until the index decisively breaks above the range, a trader should expect some volatility there and maybe some profit booking. So, since it's a monsoon, rainfall remains below normal in parts of India, especially Karnataka, where rainfall is currently running below average. A weaker monsoon could increase food inflation and eventually influence future RBI policy decisions. Therefore, monsoon progress will remain an important factor to monitor throughout the coming weeks. And yeah, at the moment, the overall market setup remains cautiously optimistic. Lower crude oil prices, supportive RBI policy, institutional buying, healthy corporate earnings, and improving global sentiment are providing strong support to the market. But however, investors should continue to watch the IT sector, the key resistance levels of the Nifty, and the progress of the monsoon before talking or taking any aggressive positions in the market. So yeah, we'll talk about the banking sector, which is leading the market. Bank Nifty opened with a gap up and is currently trading near 58,500. So, very sorry, guys. I was having issue with the mic. So yeah, I was talking about the banking sector, which is Nifty opened in the gap up. Bank Nifty continues to trade about 20-week, 50, 100, and 200-week moving averages, indicating a strong long-term trend. Also, the RBI has extended the tenure of Chairman KK Mistry until September 2026 in HDFC Bank, yeah, providing greater stability and boosting investors' confidence. Also, the RBI has approved an increase in the ICICI Bank's stake in its insurance business, strengthening its long-term growth prospects. SBI remains in focus as PSU banks continues to attract buying interest, supported by the RBI's liquidity measures. The biggest question of the today's session is: can Bank Nifty break above 58,500? Most of the people be thinking the same question. If it does, the next target could be around 59,000, making it one of the most important technical triggers for the whole week. Also, auto sector continues to outperform the broader market. Nifty Auto Index gained around 2.25%, which is last week, significantly outperforming the IT sector. Maruti Suzuki nearly gained 3.8% in the previous session. Actually, lower crude oil prices, which is actually impacted the. So yeah, we'll talk about the Bajaj Auto. It has maintained steady momentum and continues to show strength. So lower crude oil prices, healthy domestic demand, improving rural economy, which is actually impacting and affecting the Nifty Auto Index. So yeah, we'll talk about the IT sector. IT sector continues to remain under pressure. The Nifty IT index has corrected significantly over the past 6 months, bringing many quality companies into attractive valuation zones. However, the global trends remain mixed. While the semiconductor companies have faced weakness, major enterprises software companies also such as like IBM, Microsoft, and Salesforce has continued to perform well. This suggests that the enterprise technology spending remains healthy, and you should watch out the TCS, Infosys, Tech Mahindra, Wipro, and in the TCS you should watch the technical rebound. Keep an eye on the Infosys. Keep support levels after recent weakness. Relatively stronger than many IT peers, which is Tech Mahindra. Bharat Electronics, it continues to benefit from a strong defense order pipeline and also remains positive from the long term perspective. So the Asian Paints, Titan, Trend, Bharti Airtel, these stocks may continue to underperform unless fresh buying interest returns for now, currently showing some relative weakness. So, yeah, banking, auto, and pharma remains the strongest sectors to watch. The IT sector is still searching for a direction while FMCG continues to attract the defensive buying. The biggest level to watch today remains Bank Nifty. A decisive breakout above this level could set the tone for the broader market, also for the rest of the coming week. So yeah, guys, that's the news which impacted the today's market. Yeah, so we'll be back with the index and option change analysis, which will be done by Harish. So just give us 10 minutes. We'll be back. And if in that meantime, if we are thinking of taking any positions, trade or something, just put that in the comment section. We'll take a look at that particular stocks. We'll analyze it. So yeah, we'll be back in the 10 minutes.
So, hi guys, we'll be discussing about index and option chain analysis. So we can see the option chain OI price here, okay, OI increase and decrease bars here. So Nifty 50 is trading up strong by 0.24%, gaining 60.90 points to sit at 24,111. We just look at the technical chart as well. So if we look at the technical chart today, price has exactly reacted to this support level, and it is giving a strong engulfing candle. We could see. So price is currently trading at the next resistance level. So once it breaks, it could reach probably to this demand zone, sorry, supply zone, which is around 24,170. So this would be the intraday setups. Wait for this break, and you could target near the supply zone. Or if you get a strong rejection in this resistance level, then look for shorts till this support level. So we'll just have a option chain analysis. So if we look at the intraday put call ratio, we could see the intraday put call ratio, which is currently standing at 1.217, indicating that put traders are aggressively bullish, building flows beneath our feet to capture this upward drift. So the broader PCR sits at stable point 0.8826, and meanwhile, look at the top left corner. Live max pain is currently pinned right at 24,050, meaning that market is sitting exactly in the sweet spot for the option seller. So let's map out the institutional battle lines to lock down your entries. So So let's just zoom directly into the orange spot price line now, cutting through the chart on. We could see here. So this is our immediate active intraday trends. The green bar is standing tall. So the strike price is 24,100. So it is heavily dwarfed by the green column and featured a small strip increase. So since the index is sustainingly safely at 24,097, the bulls have successfully captured this key psychological fort. And it will now act as a primary line of defense against any minor midday correction. So looking at the red call writing 24,100, it is heavily blocked by the green column and features a small strike increase. So since the index is sustaining safely at 24,116, the bulls have successfully captured this key psychological fault, and it will now act as a primary line of defense against any midday correction. So if we gaze higher up the option chain, if we gaze higher up the option chain, just look at 24,200. This is a massive towering structure. It features a huge green tower alongside an equally large red ball tower, showing immense risk diagnosed type tradition today. So this is a classic clash of Titan setup, where put writers are trying to chase the momentum of 24,200. Call writers have stacked immense supply to put an absolute cap on early runway short. So look at the ultimate fortress, which is at 24,500. You can see a strong call OI has been increased. So look at that colossal solid rectangle completely topped with diagonal straight increase. This is defensive institutional ceiling for the week. The market makers have parked million of contracts here, betting heavily that the index will stay strictly insulated beneath this fortress ahead of upcoming settlement. So if you look at the 24,000 concrete bedrock base, so look at the skyscraper. It's a massive towering green pillar representing deep historical and freshly reinforced put open interest. So the institutional messaging here is ironclad. The 24,000 mark has been locked down as a master bedrock floor. So notice the red call OI bar next to it is practically non-existent. Any random afternoon selling pressure or global macro noise that triggers a sudden dip will immense institutional buying liquidity, waiting to absorb the market the moment it approaches the 24,050 to 24,000 corridor. So we'll just mark these levels in the live chart. So we'll currently the price is trading at 24,100. So the immediate support level will be 24,000. So we'll just mark that. Right. So the price has exactly reacted this morning in this level, and it has given a sharp bounce. And if you look at the next support level, yeah, 24,200. This is the most challenging area for the price to cross. We have both the put options, put OI and call OI fighting for each other. So if we had to mark 24,200, we'll just mark. Yeah, we have a resistance level also complementing to this level. So this is a strong area. So once you see a break above this level, you can definitely target till this area. And if we look at the next is 23,300 and 23,500, where the price has to go till 23,300. We have a trend line here giving us a so yeah, this would be the intraday plans. Price is highly likely to go till 23, 24,500. So just concentrate on this level till now. Let's see if it breaks this level and if it gives a continuation momentum. We might look for 23, 24,500 as well. So this would be the intraday levels. So if we look at the scenarios now, 24 to 24 200 is the range line. It has high probability. So with the PCR sitting comfortably at the bullish 1.205, and index sustaining above the 24,100 group. So the path of least resistance is a slow, steady upward crawl. However, because the 24,200 call wall is incredibly massive, expect heavy friction as we approach the 24,160 to 24,180. So the optimal strategy is to look for long triggers on minor pullback towards 24,100. So targeting a steady march towards the 24,180 boundary, you should strictly book profits. And the mean reverse, second scenario would be the mean reversion dip buying opportunity. So if sudden bout of cross-sectional profit booking pulls Nifty down below 24,100, do not panic and short blindly. Look at the incredible support cluster stacked between 24,050 to 24,000, which we just marked in the chart. So treat any sharp midday cooling off period towards 24,030 as a premium buying opportunity. Wait for the bullish reversal pattern like a 5-minute hammer on a morning star candle to load up on structural longs, keeping a strict stop loss located safely below the 24,000 bedrock flow. So the structural derivatives layout heavily favors a buy the dips approach today. So respect the 24,200 overhead ceiling, trust the 24,100 pivot line, manage your risk parameters perfectly, and let's watch how the next block order prints. So this is about Nifty and its option chain analysis. So keep eye on these levels. We'll just move to Bank Nifty within 10 minutes. Until then, let me know if you have any doubts in the comments. So if you are trading Bank Nifty right now, stop what you are doing. Drop a like on the screen. Lock your eyes into this dashboard and pay absolute attention. So we are tracking a phenomenal, dangerous, and highly deceptive derivative setup as on 10:49 a.m. on Monday, June 29, 2026. So if you look at the price on the screen, Bank Nifty is technically trading at 58,156, which is down by minus 0.04%. So on the surface, if you're just looking at a simple candlestick chart, it looks like a calm, consolidating, completely harmless market. So, but as a professional day traders, we don't trade surface illusions. We look at the underlying structural data. So, I'm going to show you a hidden order flow uh, graph developing on Bank Nifty derivatives. So, right now, the most retail traders are going to blindly walk straight into. So, if we will just show the graph chart. So if you look at the price ticker at our volatility check, we can see there is India which just pulled off nicely to 13.39, which is 13.46, which is up by 41%. So volatility is that we have moderate volatility. Ordinarily, when price stabilizes and which goes down, you expect the bulls to build a comfortable position. So, but look at the institutional metric next to it, the intraday call ratio, which is currently flashing at 0.209, which is ultra bearish. So let it sink in. A PCR of 0.209 is means for every single put contract written today by bulls trying to build a floor. So big institutional led market makers are dumping nearly 5 call options over your head to lock down the roof. So the broad structural PCR all sits at 0.8670, but the immediate intraday action is extremely skewed. If we start zooming into the strikes to see, we can exactly spot the traps that is laid. So if we let's run our eyes straight down to this vertical orange anchor line, just cutting through the middle of the chart. So the index is printing 58,213, 58,065. So look directly underneath our feet at 58,200 strike. Do you see any major green bars? No. Do you see any thick striped columns building a concrete base to protect you from a fall? Absolute radio silence. So the green put options accumulation here is practically non-existence. So just now looking at the 58,100, we see nothing. Look above it, 58,300 and 58,400. We totally structural emptiness on the green side. So it means this entire morning drift above 58,200 is built entirely on a hollow foundation. The buyers are completely riding on a thin air in the option chain. So there are no large institutional prop desks uh, willing to commit fresh capital to write books at 58,200 to back up this move. So when a market moves a higher or stays flat without green put writing expansion, it is not a structural rally, it is temporary artificial liquid vacuum. So if we look at the actual smart money which has developed its heaviest capital commitments today, we don't guess. We let the data tower tell the story. So if we look at the 58,000 strike and 59,000 strike, we can see a 58,000 and 59,000. So looking at the towering great skyscraper at 58,000, even though the index has drifted past it to 58 to 13, look at the top of 58,000 red bar. It is heavily filled with fresh diagonal which scripts increased contracts. So looking at all the way to the right side of the screen at the round number 59,000 straight, another massive standalone red tower completely dominated by diagonal strip increase. So thinking about the psychology here, the index is trading at 58,213 via massive institutional option trader aggressively adding more short position. The 58,000 call today is creating a massive leap in the money liability. So they are doing it because they have zero fear of an upward move. They are heavily underwriting these calls. So collecting massive premiums and drawing a hard line in the sand. They are treating 58,000 and 59,000 as absolute ironclad ceilings for the current expiry series. So if we look at the max spin gravity wall, so for those of you who are new to option trades and institutional order flow, remember that max pain represents max pain is the exact price level where option players stand to lose the maximum amount of money. So if you look at the max pain level, it stands at 57,800. So it stands to pocket the largest amount of absolute premium profit. So right now Bank Nifty is trading up 58,213, but the structural maximum gravity well is sitting down at 57,800. So that is a massive 400 point divergence. So when you combine a depressed intraday PCR of 210, 0.210 and complete lack of green put support, we could take a massive fresh call writing at 58,000 and a max pay target down at 57,800. So the puzzle pieces align perfectly. This is a classic distribution phase. So the market makers are holding the cash market flat to lure retail traders into buying calls, while they are aggressively positioning themselves for a shift at aggressive mean reversion move down towards the 57,800 magnetic bull. So if you look at today's actionable intraday blueprint and execution strategy, do not chase calls here. I don't dare you care if you see a sudden random 50-point gain candle try to break out above 58 to 50. Do not chase long positions into this zone. So the option chain structures tells us that you are walking straight into a major institutional distributional trap. So the risk to reward ratio for longs is completely skewed against you. So two scenarios we will watch out two scenarios. So first scenario would be keep your eyes glued to 57,500 to 400. 58 to 50 to 58 300 zone. We'll just look into the charts here. So this area 58 200 to 350. We could see a rejection level here. So if you're if you keep your eyes glued to this 5-minute candlestick chart, So if the index experiences a minor final push towards a 58 to 5300 zone, wait for a signs of physical exhaustion. We have seen here, right? We saw a long bear engulfing candle. So if you see a kind of stick pattern like very symbol for evening star or a green double top breakdown, you can take a short position. Place your strict stop loss safely right above 58,350, and your primary downside take profits target will be unwinding targets down at 58,000, and ultimately the master 57,800 max spin gravity wall. So the second scenario would be in the defensive wait and watch. If you are purely a conservative premium buyer, don't want to fight the immediate intraday trend. Use it tightly on your hands. Wait for the afternoon session. If the market makers trigger a sell program and back Nifty cascades down to the test D support, which is visible near 57,500 to 57,400, only then you look for stabilization signs to build an accumulation long. So this derivative ledger shows that smart money is heavily shorting calls and preparing for a downward pivot. Respect the 57,800 max pain point and ignore the flat green noise on the screen. Execute your setup with absolute discipline and manage your risk parameters to perfection. Let's watch how the next order block prints. So this is about the bank nifty and its option chain analysis. So let me know your understanding of this. If you, what's your view on this? Let me know in the comments. So we'll just move on to Sensex index and its option chain analysis within 10 minutes. So until then, let me know your doubts or your plans for Bank Nifty and Nifty in the comments. So we'll now talk about Sensex. So before that, smash that like button, drop your current open positions in the live chat, lock your terminals down. So we are tapping live into the pulse of Sensex monthly expiry. So we'll just scan the headline vitals. Right now, Sensex is putting on a uh, Sensex is putting on a masterclass in a range bound torture for retail option players. The spot price is hovering right at 77,120 up a microscope plus 0.03%. It is completely flatlined. So, but look good. We need the mood at the option chain mechanics. We'll just put the yeah. So India VIX is currently trading comfortably at 13.40, which is around plus 0.35%. So this is an option trader's dream environment. Volatility is collapsing, but it's not spiking either. Meaning option premiums are juicy and 90K is actively eating buyers alive. So we'll just look at the intraday put call ratio, which is printing at 0.98, and broad PCR is at 1.0185. We are sitting dead center at the perfect 1 is to 1 is 3 equilibrium. So the bulls and bears are locked in a relentless trench war. Matching contract for the contract blue for blue. So most importantly, live max pain is fit precisely at 77,100. So the index is trading exactly 37 points above the ultimate institutional gravity well. So this tells us that the large proprietary trading desk have engineered this morning sessions to keep the index stuck in a vice grip. So we'll start breaking down the line so you can see where the massive block traders are hiding. So we'll zoom the chart right into the active line of fire. So look at the where the sharp orange vertical line labeled, which is at 77 137, which exactly lands on 7700 strike price. So it cuts directly between the 7700 and 200 strike price. So this 100 point zone is the definitive epicenter of today's institutional layout. So if we read the tape on 7700 strike, look at the green bar. It shows a very solid pillar of put open interest backed with fresh diagonal green striped increased blocks. So this shows that every time the index dips towards 7700, local algorithmic desks are aggressively underwriting puts to defend the line. So if you look immediately next to it at the red bar, there is a highly significant column of call writing also building up with fresh diagonal red stripes. The option selling sellers are actively fighting to prevent 7700 from turning into a launch pad. So if we look at the look right next door at the 77,200 strike, the picture flips dramatically. The red call tower completely dwarfs the tiny green foot bar. So look at those heavily diagonal red stripes loading up today. Big institutional money is treating 77 200 as their immediate localized ceiling. They are dumping massive call selling volumes here to choke off any sudden momentums. So this means if you are buying call options expecting an explosive morning rally beyond 77 200, you are directly fighting a multi-million dollar wall of institutional capital. So we'll next look into the 77,000 concrete floor. So if there's a massive towering gain figure of put open interest, which was changed by around 5.93 lakhs and calls for is changed by around 3.81 lakhs, where you can see a massive difference. So notice those thick clean diagonal green stripe covering the upper position of the bar that represent a massive influx of fresh intraday capital loading up on the put writing side today. So these are master concrete floor. The big institutional players have built a heavily fortified garrison at 77,000. And looking at the tiny red call bar next to it, it is practically invisible. So nobody wants to sell at 77,000 because the market makers knows this level is highly insulated. For intraday traders, this tells us a vital mechanical tool. Any quick midday cascade or panic-driven drops towards 7750 or 77,000 pocket is highly likely to face a massive wall of institutional buying liquidity. It is a structural springboard. So if we look at the underlying 77,000 strike with the thick green horizontal line, to signify bedrock support. So we can have a narrative here. So let's find ultimate no entry sign posted by the market makers. Look over the right hand side of the chain, which is 77,500 fortress. So looking at the covering red column at 77,500, it's the single largest absolute accumulation of call open interest visible on the entire board today. So notice the thick diagonal stripes covering nearly half the tower, signaling the call writers have aggressively expanded their risk here during the morning trade. So this is a massive structural institutional fortress. So if you scan even further down to the right of 78,000, you see another deep standalone red column that's showing a fresh intraday increase. So think about the sheer scale of capital required to erect a red wall that high at 77,500 on a monthly expiry day. So these are massive institutional desks collecting thick premiums and declaring a firm cap on the market. So unless we get an extraordinary, unprecedented wave of cash market buying, the option ledger is shouting that the upside for the day is strictly locked down beneath 77,500. So this is exactly why PCR is holding flat at 0.98. The ceiling is just as heavily guarded as the floor. So if we look at the deep OTM activity and historical mapping, we'll just look at the 76,500 strike. So look far out to the left at the 76,500 strike. We can see you see a prominent green cover. We can see very closely at how the bar is split. The solid bottom of represent heavy historical accumulation from previous session, and while the top of features fresh diagonal green stripes added today. So this reveals the structural long-term funds are rolling over the protective push to 76,500, ensuring a multi-layered cushion exists way below the current spot price. So if you look at the far wings at 78,000 and 7800, which we discussed, we saw our red call towers are completely uniform with sharp diagonal increases. So this tells us that even if a surprise global headline takes, the market makers have already positioned their defensive outpost way out in space to absorb the shock wave. So the absolute mathematical symmetry of this entire chain confirms that we are looking at highly controlled, time bounded market. The market makers are in absolute control of this tape, and they are pocketing premium from both the retail call and buyers and put buyers simultaneously. So we'll just look at the scenarios for today. We'll look at the expiry execution blueprint and afternoon game plan. So if we look at the max pain, pin and consolidation, which is high probability. So given that the spot price is at 77,135, the intraday PCR is a balanced at 0.983, and the live max pain is sitting squarely at 7700. The highest probability outcome for the afternoon is a quite frustrating premium TP session. So the index will remain heavily pinned between 7750 to 77,200. So in this scenario, the premium buyers should stand down. Optimal plays developing range bound premium selling setups like short straddles or iron counters centered around 7700 to let theta do the heavy lifting into the 3:30 p.m. close. So what is Wolf Mountain afternoon breakout? Do not front run it. We must wait for a clean, decisive 15-minute candle close above the 77,200 200 resistance wall. So if that happens, watch this live chat instantly. So if you see the trend tower 77,200 start to deflate or show a hollow box at the top, it means those call writers are panicking and rushing to cover their shorts. That short covering will act as a mechanical fuel driving the rapid 150 point squeeze towards 73 or 350. So keep your risk managed. Trade the data columns rather than your emotions. Protect your trading capital and let's watch how these afternoon block trends. So this is about Sensex option chain analysis and the index analysis. So let me know if you have any doubt regarding this.
Hello, hi guys. We'll talk about the open interest spikes. So, uh, guys, I'm looking at a raw data spreadsheet right now that tracks the latest open interest, current open interest. So, we're actually seeing the additional up to 88% in the single day over the next hour. So, we're going to tease that data apart and look at the underlying news and also driving these spikes. Also, we'll break down the top five stocks you absolutely must keep your eye on. Also, you should keep those stocks in your watch list for the rest of the today's trading session. So, before I actually take the name of the stocks, let's talk about the real traders for a second. So, a lot of beginners look at just price and value. Price tell you where the stock went, volumes tell you how many hands it has changed. But open interest, yeah, I was talking about the open interest. As I mentioned, the open interest, it tells you how many contracts are still open and active in the market. So I'll tell you the series of commitments being made by big money institutions. So when you see a stocks OI jump by 20 or 50 or 88%, so it means massive money is entertaining the room and it's building positions. They aren't just trading intraday; they are just holding overhead because they expect a massive trend. Now, spike in OI alone doesn't automatically like mean buy. We have to look at the underlying price direction. So if the price goes up, the OI goes up. There is a long build up. If the price goes down, OI goes up. It's a short build up. So today we are seeing both. Let's look at the chart and what stock are like you guys seeing crazy movements in the day. Yeah, persistent. It has mind-blowing open interest change of 88.87%. It has added 63,245 fresh open contracts with a massive volume of 3,41,861 contracts and an underlying value of 4,346. So yeah, why is this happening? Let me tell you, persistence is the biggest story on the street today. Over the weekend, they dropped a massive double whammy of news. First, they signed a massive $650 million, 6.5 year contract with the top US tech firm. Second one, they announced the landmark all crash voluntary takeover offer to acquire Nagaro for 1.27 billion euro. So to create a massive global AI-led engineering powerhouse with 50,000 employees. But here's the reality check. As a peer trader, the stock is actually trading down roughly 8% today despite the news. So why? Because the market is pricing in the massive cash outflow and premium paid for the Nagaro. This massive 88.87% OI spike is a classic short build-up mixed with a heavy institutional hedging. Do not blindly buy the dip here without a clear chart reversal. Oh, the second one in Astral. Change in OI is heavy, 52.89%, adding 13,869 contracts with a total value of over 74,000 to 66 lakhs. Yeah, the still has announced a massive corporate restructuring. They are looking at demerge their chemicals business into completely separate listed entity called Astral Chemi, while simultaneously absorbing all as this plastics. On top of that, global brokerage JP Morgan just downgraded the stocks to neutral. This heavy corporate change combined with the brokerage downgrade is forcing funds to reshuffle their portfolios and triggering huge derivative volatility. And the next one is Kotak Bank. Yeah, OI is up to 15.66%, adding 20,000 to 50 new contracts with a massive future value of 2,53,163 lakhs. And big news in the private banking space today. Kotak Mahindra Bank's CEO Ashok Vaswani was informed that board that he will not seek a second term due to personal reasons, stopping away at the end of December 2026. So, whenever a major private bank undergoes a leadership transition, institutional options where writers and futures traders pile into hedge against long term management uncertainty. So, this is creating excellent range bound trading opportunities. Yeah, the next one is Dr. Reddy. Yeah, it's in number 4 in our list today. So it shows a solid 22.87 rise in open interest with 11,505 contracts like added. So you should look at the broader market today. Global cues are a bit cautious due to renewed Middle East tensions, and when the index gets shaky, smart institutional money starts moving into defensive sectors, specifically pharma. Dr. Reddy's and Torrent Pharma, which also added 50.83% of OI, are leading the gainers today. This is a fundamentally supported long build-up. So if you want stability today, pharma is where the relative strength is. Yeah, the next one is Wariner. Y is up to 21.17%, adding 13,868 contracts with a high value of 1,62,551. The green energy and solar ecosystem is seeing heavy speculative interest this week with major contract rollovers and fresh retail institutions momentum is renewable stocks. So Vari Energies is exhibiting massive volatility and also strong value presence. Watch for key intraday high breakouts here in a key intraday. So yeah, we'll come to Nifty and Bank Nifty. We'll talk about that. Nifty added to 27 lakh to 40 20 sorry,
Yeah.
27 lakh 24,305. Sorry. Yeah. This is a 34.87% change in a single day. And Bank Nifty also added 3 lakh 46,528 contracts, which is 20.46% change. Because we just had a long holiday weekend, this is a massive influx of fresh monthly positioning. So Nifty is holding beautifully above 24,000 as long as 24,000 acts as a hard floor on the option chain. The overall bias remains buy-on dips despite the short-term noises in individual IT stocks like persistent. So yeah, I was talking about the stocks. So you should keep your eye on today, and you should keep them in your radar. The first one is persistent, which I mentioned, and it has uh, with a open interest of 88.87%. So while it's huge for long-term growth, the stock tumbled over 9% in a early trade because the market feels the acquisition is quite expensive. This is a massive short build-up as an institutional hedging play. Do not just blindly catch this like falling knife. Okay. And the second one is Astral. As I mentioned, the open interest is 52.89%. Stock has plunged nearly 10% today. Investors are worried because the core plumbing business will no longer across subsidize the chemical wing, forcing each to stand on its own. This heavy fund rebalancing is driving the massive OI additionals. The next one is Fin Nifty. Gained 17,535 fresh open contracts on the value of 242K, open interest of 47.30%. So pure index positioning coming out of a long weekend, institutional option writers are aggressively writing strikes around the 26,600 to 26,700. Uh, yeah, in these levels to capture premium decay. Yeah, the next one is Nifty with open interest of 34.87%. A massive multi-million addition, 27 lakh 24,305 contracts which added in Nifty. Big directional bets are being deployed with Nifty hovering right at the crucial 24,000 milestone. Institutional desks are building heavy protective walls. As long as Nifty holds 24,000 on a closing basis, underlying structural bias remains buy on dips. And the next one, as I mentioned already, which is Dr. Reddy with open interest of 22.87%. And also, I have mentioned 11,505 contracts are added. The US FDA concluded an inspection at its Bachupalli biologics facility and issued a Form 483 with seven observations. While that sounds scary, the stock is seeing relative strength because big money is actively rotating capital of volatile tech shares and into safe haven defensive. Also, the pharma news names today. Yeah, the next one is Supreme India with a OI spec of 21.83%. Also, it has gained 4,758 new fresh open contracts. Mirroring the chaos in Astral, Supreme Industries is seeing proxy derivative action as the trader hedge exposure across the entire plastic pipes, also the polymers and construction material sectors. Yeah, the next one is Bank Nifty with the open interest of 20.46, gained 3,46,528 fresh new open contracts. Bank Nifty is observing massive corporate updates from major private banking gains today. So open option signs are indicating a heavy volatile range bound session. Yeah, the next one is Max Health with OI of 16.30%. It has gained 6,942 new contracts. Block deal adjustment and steady institutional defensive accumulation. Yeah, just like Dr. Reddy's healthcare is acting as a solid shock absorber for the market today. The Max Health is also performing. Yeah, you should keep your eye on Kotak Bank today since it has open interest of 15.66%. Even though it's sitting just outside the top 10 in our list, you cannot just ignore Kotak Bank today. Over the weekend, MD and CEO Ashok Vaswani announced he will step down at the end of the December due to personal reasons. So, management transitions in Taiwan private banks has always triggered massive institutional uncertainty. So the stock is down today, and options traders are piling in. Expect a highly choppy and range bound behavior here. You can accept that. Expect that. So yeah, you should keep an eye on global crude oil tracking lines. So any sudden spike during the afternoon European session will immediately impact oil marketing companies and also the paint companies like Asian Paints and Industrial Chemi. Also, you should keep an eye on TCS, Infosys, HCL. The 9% crash in persistence could drag down general sentiment across the entire mid cap and large cap IT space if institutional panic spreads. So yeah, all right, guys, let's stop looking at the spreadsheet like robots now. So we'll talk about actual psychology. So I want you guys type in the live chat right now. So, have you taken any trade or have you bought a stock or amazing corporate news? So, according to our data, the market is putting an absolute clinic on how institutional trap detail retailer traders using news. Persistent has signed a $650 million mega deal, and which I mentioned, and also buying a German tech gained bullish kinda. Also, Australia is splitting its business to unlock massive value for its shareholders in clean 1:1 share mirror match. So, kind of bullish. So, Dr. Reddy, they actually had a bad regulatory news today. The US FDA from 483 with 7 observation and their Hyderabad site. Normally, retail traders panic and short, but look at the data. OI is actually 22.87%, and it's backed by a high total derivative value of 1,20,834 lakhs. So, why you think it's holding up? Because smart institution money is actively rotating capital out of the high volatile, also the IT space today. And it's hiding out in the defensive form and names like Dr. Reddy and also the Torrent. While retail is panicking over minor FD observations, the big money is using it as an excuse to accumulate the shares cheaply. So yeah, if the stock has a massive OI spike but the price is moving down, let the short exhaust themselves first. If the index feels unstable under the 24,000 line, keep your eyes firmly glued to the steady accumulation happening in Dr. Reddy and also Max Health. Yeah, guys, this is all about the open interest spikes for today. And also, I have mentioned which are the stocks you should keep your eye on for today. Just watch them closely for today and observe. And yeah, we'll be back with the stocks which are outperforming and underperforming. Sectorial wise, we'll be telling. And also, we'll be discussing the news which has actually impacted that stocks, whether it's outperforming or underperforming. So yeah, uh, we'll discuss about the heat map. According to the live data, we'll discuss which and all sectors, which and all stocks are outperforming and which are not. If you are looking strictly at the headline Nifty index today, so you're missing that the real world happening under the hood. Nifty is quietly sitting around 24,005 baseline, but look at the extreme sectorial discipline on your screen right now. The big institutional desk, FI and DI are executing a massive textbook risk of portfolio rebalancing. They are aggressively pulling cash out of high beta growth and dumping it straight into a safe haven defensives. So yeah, we can look at Nifty Auto with minus 1.75%, Nifty Chemicals of minus 1.35%, also the Nifty IT with the minus 1.6%. They are bleeding out. So where is that cash running? Is it flying into Nifty Pharma with which is actually at 1.37% of increase, or Nifty Healthcare which is actually 1.21% of increase? Yeah, we'll talk about the outperformance, which is comes under Nifty Pharma, observing a bad news with relative strength, open interest of 22.87. The news which is actually impacting Nifty Pharma and Dr. Reddy's, which I already told you, the news about Bachupalli, also about the inspection. So normally a Form 483 drops stock, but Dr. Reddy's is actually holding a strong gains. Why? Because this company has handled similar observations clearly in the past. The institutional funds are so hungry for defensive healthcare for today, and that they are using their regulatory noise to aggressively accumulate shares. And the next one is SIPLA, which is in Nifty Pharma. Yeah, high volume institutional accumulation, which has added 14.36% in ORI with 1,14,661 trading value. Displaying a massive structural long build up, large cap institutional is looking for a safe, liquid, and high margin domestic parametrial exposure. The next one is Sun Pharma, demonstrating immense relative strength on the intraday charts. It acts as the ultimate defensive anchor whenever the broader market faces global macro hindrance. The next one is Lupin, gaining heavy momentum as a short-term derivative. Option desk aggressively by call stakes on the back of sector-wide long editions. And the next one is healthcare, which is Opolo, rising steadily as a part of the broader index, rotation into defensive healthcare services. The next one is Nifty Metal, Zindal Steel, JSW, which has gained 0.80% in the Only other prominent green spot today. Selected steel majors are catching institutional bids due to steady steel pricing and also low structural correlations with the bleeding IT sector. Yeah, we'll talk about the underperformers. One is persistent, which is actually have a highest OI for today, 88.87, and it has announced massive all cash voluntarily public takeover offer to acquire Germany listed Nagero. While the acquisition builds a massive $2.9 billion run rate, AI digital engineering gate, the offer represents a jaw-dropping 140% premium over its undistributed price. The stock tumbled over 8% in the early trade as the market reached to the steep premium and financing costs via Barclays. This is actually a massive short build up here. The next one is Astral, which is 52.89 OI, which I mentioned. It fell sharply as a global brokerage. JP Morgan downgraded Astral to neutral with a reduction target of 1,600 rupees. The street dislikes losing the each cash cow cushion of the core plumbing division, growing chemical painting, sparking massive mutual fund portfolio. Also, it's rebalancing. Also, the Kotak Bank, which is underperforming for now, 15.66% in OI interest. Also, massive future values of 2,53,163 lakhs rupees. I have told it, I have discussed and informed the news which was affecting the Kotak Bank about CEO Ashok Vaswani. He is announcing his retirement in December. So that particular news is affecting the Kotak Bank for now. Private banking stocks, despite management uncertainty, while the bank's underlying Q4 net profits, which is jumped 13% to 40.27 billion rupees. The sudden leadership transitions forces institutional options desk to build a highly aggressive productive option. Made very choppy play. The next one is Adani Enterprises, down over 2.5%, acting as a heavy anchor dragging down the broader index during the morning session. Dropping over 1.1% entirely due to structural sector liquidation, Infosys, when funds exist as a sector due to localized news like persistent, large cap liquid counters like Infosys get sold off for the liquidity, especially. So yeah, when a stock cracks 8% to 10% on massive news with an enormous open interest spike like Persistent and Astral, that is actually algorithmic short build up. Do not try to be a hero and build the deep head. That's the institutional short execute themselves first. If you want to take a long position for the rest of the today's session, ride the institutional wave where the relative strength is firmly in the pharma and healthcare space, of course, which is Dr. Reddy and Cipla, also the Max Health. So yeah, the main important topic we took here, which is option premiums. A lot of retail traders stare blindly at the Nifty index chart, saying, "Oh, Nifty went up 20 points. Why is my call option dropping? Or Nifty is flat. Why I'm losing money?" So today is Monday, and we have a very specific option environment. Today is the BSC Sensex monthly option expiry, as you guys know. Because of that, we are seeing the intense cross index volatility between 2 p.m. And also 3 p.m. till the market ends, as the big institutional players roll over settle massive index. Meanwhile, tomorrow, Tuesday, is a weekly Finifty expiry. So when you trade options on a days like this, you aren't just trading direction, you are actually trading against time decay, theta, and also volatility changes, which is vega. So let's look at how this is breaking down right now. The first one is Finifty expiry, which is actually a battle for now. Looking at our tracking data, Finifty has it has added 47.30% in open interest today. So with the underlying Nifty index hovering 26,626.90, tomorrow's expiry is causing major premium distortions. So because the index is down slightly, the money, yeah, the ATM, which is 26,650 call options are bleeding out rapidly, even during small afternoon index bounces. These call premiums fail to recover. Why? Because the theta accelerates dramatically within 24 hours of the expiry. And if the index moves sideways for just like 20 minutes, the premium drops by 10% or 15% without the underlying spot. Without the underlying spot even moving an inch. So institutional options writers are aggressively selling both the 26,700 calls and 26,300 puts. They are pocketing that exact premium decay. This is why the index is feeling heavy. The big players are actively defending these strike zones to let the premium decay to zero. So since Nifty has added 34.87% in OI today, the index is trading right on the edge of 24,005. Retail traders are seeing Nifty down as a little bit and aggressively buying out of the money. Puts like the 23,900 put, calls like the 24,150 call. Because India VIX is sitting relatively low at around 13.05, the market is not pricing in wild. Also the systematic panic. When VIX is low, option premiums are fundamentally cheap, but they lack momentum. If you buy an OTM option today and the market stays flat or moves slowly, the IV crush combined with the time decays will eat away your premium. Even if you get the direction right by the end of the day, this is how the retail accounts get trained as sideways. So persistent system is down over 8% on the back of its massive acquisition news. So you can look at the option change, which actually explained by Harish. It has it's an 88.87 in OI also. So when the news dropped, the implied volatility of persistent options shot through the roof because everyone was rushing to trade it. The premium for both calls and puts became heavily inflated, which is actually expensive. So if you bought the 4,300 put late in the morning thinking momentum would carry it loader, you likely notice that even as the strong ticked down a few more rupees, your put premium actually started declining or stagnating. It It has happened. It's a classic Vega meltdown. Once the initial shock of the corporate news settles, the uncertainty drops and the IV begins to cool down. When IV drops, option premiums deflate across the board, hurting both breakout buyers and dip buyers. This is why buying options on high news days is incredibly risky. You are paying a massive premium tax to the option writers. On the low VIX day with the flat index, buying deep out of the money calls like or put in a mathematical guarantee that you will lose money for your premium to time decay. Stick uh, strictly in the money at or at the money contracts where the value protects you. Because today is the Sensex monthly expiry, expect institutional automated algorithms to trigger heavy between 2 p.m. and 3:30. This will cause a sudden or a sharp spike in Nifty premiums. If you are in an intraday scalp trader, keep your position sizes small and protect your capital. So yeah, that's what about the news which has impacted the today's market and the stocks which are outperforming and underperforming. Also the sector which are outperforming, also underperforming. So if you have taken any trade or if you are thinking about taking any positions or still confused and if you want to look at your favorite stock in our chart, just let me know in the comment section. We'll together analyze the stock. We'll talk about it.
Hi guys, we'll just look into the stocks based on corporate actions and news that might impact tomorrow. So the first one is Bajaj Holdings and investments. So we just put the stocks. Let's also look at the technical chart. So if we look at the stocks, there's a massive Bajaj dividend cluster. So when a stock goes ex-dividend, the exchange mathematically adjusts the opening price downward by the exact value of the dividend. So remind your viewers, this is structural adjustment and it's not a sell-off. So if you look at the corporate actions, so if you look at the corporate actions, first one is the Bajaj Holding and Investments Limited. So this is the big monster. Tomorrow is ex-date for whooping 130 per share total dividend. So this is split into an 80 final dividend and a special 50 dividend. So the analysis on this would be on the exchange, the stock price will mathematically adjust downward by roughly 130 rupees. Do not panic. So when you see the stock opening lower, this is a structural holding company holding prime stakes in Bajaj Auto and Bajaj Finserv. So what's the post adjusting buying momentum? So if we just look at the technicals here, so the market has reacted to supply demand zone. It's a broken supply zone which will act as a demand zone. So if the price opens, if gap comes tomorrow due to this, wait for this resistance level break, then you can see a upward momentum. So the next one is Maharashtra scooters. So the corporate action for tomorrow is it is going ex dividend tomorrow for a hefty 60 per share final dividend. So the analysis on this would be another crucial proxy within the Bajaj ecosystem. So high dividend payouts like this often attract long-term value investors looking to lock in yields. So this would be a great time for the stock to go upwards. So if you look at the chart, we could see that the trend is clearly in uptrend. We can see this the major structure has given us a trend moment and it's just a minor correction. So exactly the price is reacting towards this resistance level. So just look for a bullish pattern candlesticks or a change in state of delivery so that you can look for a long positions. The next one is Bajaj Finance. So the corporate action is it is going ex dividend for rupees 6 per share. So while rupees 6 per share might look small relative to its stock price compared to Bajaj Holdings, it's a key cash outflow event. What's the option chain here? As dividend adjustments can mildly shift the near the money strike price dynamics. So So once you get the reaction, look for since the price is trading near this level, look for any reaction. If it opens downwards, look for the retest, and the trend is uptrend. So just look for buys only. Don't blindly sell. If it opens gap down tomorrow, just wait for this resistance support level. This level will be broken and will act as a resistance. Wait for the regain. Once it regains this level, then you can look for a momentum. So the next one is Bajaj Finserv. So again, the corporate action is going ex dividend tomorrow for rupees 1.50 per share. So this all comes in it's a Bajaj dividend cluster. So it's a historic day for Bajaj Group as multiple entities go ex dividend simultaneously. So the next one would be energy spin-offs and restructuring stocks. So we'll just look at Gujarat Gas Limited. So the corporate spin-off following its massive mega merger involving GSPC and GSPL. So the entity is undergoing a major structural evolution. The gas transmission business is being spun off into GSPL Transmission Limited. So this is the stock. So this is a classic corporate arbitrage play by separating the high volume city gas distribution business from the pure play utility transaction business. The company is aiming to unlock massive shareholder value. So the stock will be highly volatile tomorrow as the market prices in the pure play distribution model versus the transmission spin-off. So the analysis on this would be the stock will be highly volatile tomorrow as the market prices in the pure play distribution model versus the transaction spin-off. So if you look at the chart, we could see that the trend is currently downwards. So just look for downward thing only. We could sell. You can look for short positions. So there's a supply zone which has recently regained and currently it is trading near a support level. So look for a break. Look for a break and proper close below this level. Or you can also look for the retest as the price is overly extended. You can look for a retest over this and look for a bearish candlestick patterns. Then you can execute the positions. So the next one is Welspun Corp Limited. So it is going. The corporate action for this is it's going going ex-dividend tomorrow for rupees 5 per share. So Welspun has been a major player in the line, pipe and infrastructure space. Rupees 5 dividend shows solid cash flow generation. So track the stock around its immediate support zones tomorrow to see if the dividend dip gets aggressively brought up. So currently the price is exactly it has given you the retest. So you can expect a gap up tomorrow in a shorter time frame. So the price has the trend is still in the uptrend, but the price is slightly overextended here. You can see that price has recently gone here. So you can wait till if it doesn't. This is a good reaction here. So yeah, wait if you see a gap up opening tomorrow. That's a strong sign of uptrend. There might be a slight bullish exhaustion, and the price might come to a correction. So if you see a strong bullish pattern kind of during the correction, then you can go for a long position. So the next one would be the next category in the corporate actions would be buyback and capital efficiency. So the first stock in that is Patel Integrated Logistics Limited. So the corporate action for this is share buyback and record exchange tomorrow. So when a company announces a buyback, it signals management's belief that the stock is undervalued. So or that they want to optimize equity efficiency. So for micro small cap logistics player, a buyback can drastically sting the equity flow, creating sharp low volume upward swings if demand returns. So watch the liquidity closely tomorrow. So since the share is buyback, you can expect a gap down. You can expect a gap down and land near this support levels. So this would be the another corporate action related stock to watch tomorrow. So the next category would be the consumer and primary market. The stock is Chelsea Labs. So the corporate action is it went ex-dividend for rupees 3.50 per share. So as an FMCG play, Jyoti Lab is a textbook capital rotation candidate. So when high growth tech or high beta banking stalls, consumer staples with solid return ratios, it provides an excellent defensive hiding spot for institutional capital. So the higher time frame shows a strong downward move. So this might even though this shows a bullish signal, but since the stock is in upside move, just confirm it with technicals. Look for a resistance break. You can see a demand zone also here. So once the price closes above this level, then you can go for long positions. So these are the stocks based on corporate actions. So just we'll talk about the corporate arbitrage risk strategies. So when trading corporate actions like buybacks, spin-offs, or massive 130 rupees dividends, never treat them as a free money. The market always adjusts price instantly on the exchange. So the real strategy isn't trying to capture the dividend cash. The strategy is observing the post-action price discovery. So if the stock like Bajaj Holdings drops by the dividend amount tomorrow, but sees a strong institutional buy volume within the first hour of trade, it tells you that the structural long-term story is rock solid. Even a spin-off like Gujarat Gas creates clear focused value. That's where your medium-term swing trade lies. So make sure you have these 8 stocks loaded into a separate watch list on your terminal tomorrow morning. So keep a very close eye on Nifty open interest to see if the overhead resistance softens or hardens. So if you found value in this deep dive, make sure to smash the like button, subscribe to the channel, and share the stream with your fellow traders.
Hey guys, yeah, it's almost 3:30. It's over 3:30, and the market's over. Thank you so much for attending. Yeah, thank you so much for attending today's session. We'll be coming live tomorrow as well at the same time, 9:15. Uh, yeah, hope you guys were in the good position today, and just contact us. The website link in the description, and also the demo link is also in the comment box. So contact us anytime. Tomorrow at the same time, our live start at 9:15. So please join, and also we can subscribe. Thank you so much. Have a good day.